Okay, welcome back. You're listening to the weekend edition of the Cortland Economics Report. I'm Al Cortland. Appreciate you joining me. The show, I'll say this, every segment is being originated from the Cambridge House International Investment Conference up in Vancouver, BC. What an interesting deal, I have to tell you. Some really striking news came out this morning, and we're recording this particular segment on Monday, and that is that an oil embargo is being imposed on Iran by the European community and also by the United States. The implications of this particular embargo, I think, could be very interesting. Certainly there will be implications regarding the price of oil. I think it's going to go a little bit farther. I think there are going to be some very significant implications involving precious metals. You know, as Kathy and I were talking about it this morning, her comment was, hey, you know what, it's not going into effect for at least 6 months. Specifically, it's not going into effect until June of this year. A lot can happen between now and then. I got Marc Davis with me. As you guys know, Marc was on the show last week. He is a former associate at Reuters, did on-camera television news work in Canada. So you're pretty up on this stuff. What's going on in your opinion?
I think geopolitical events in the Middle East will take center stage this year, Al. That's going to have a pretty considerable impact on the price of oil, but there's also on the price of gold. Iran is getting increasingly belligerent.
Yes.
There's a lot of talk in the Israeli media about the need to disassemble, if you will, Iran's burgeoning nuclear program, and apparently 2012 is the year that it has to be achieved.
The year of the dragon.
So we could see fireworks in the Middle East, and I think. If the U.S. government doesn't intervene militarily, the Israelis will.
Oh, I'm sure they will. I don't think there's any question about it. Here, you want an off-the-wall prediction, Mark? I'll give you one. President Obama is going to spend $1 billion on his re-election campaign. He needs the Jewish vote in the United States. You better believe between now and October, the United States is going to be involved. Now, it was announced this morning, Monday morning, that in fact there were 2 warships there which had joined the French warships, 2 from France and 2 from the United Kingdom. So, oh yeah, I mean, it makes all the political sense in the world for our president to do that.
I think President Obama does need to firm up his foreign policy.
Oh yeah, what foreign policy?
Well, he's been perceived as a lame duck president, and that could be a major liability going into his re-election campaign. If he does something to show a sign of strength in his dealings with rogue states such as North Korea and more pressingly Iran,
yep.
That could help his re-election campaign immeasurably.
Oh, I mean, it's amazing, really, how much it would further that, in my opinion. I think, the Middle East has been a powder keg waiting to explode for a long time. We had a lot of people would really take offense by my saying this, but we had a minor eruption with Iraq. That was pretty controllable. In terms of Iran, however, with the implications of where are the Chinese going to side, where would the Russians side, the implications of a major escalation in Iran, Mark, in my opinion, are pretty significant.
Well, you're right, Al. I mean, the Chinese and the Russians rely upon Iranian oil, so it's implicit that they may stay on the sidelines and not support the United Nations or Israel or the U.S. In any military intervention. They could even align themselves with the Iranians. So it's a can of worms.
Oh, to call it a can of worms is, it's the understatement of the decade, in my humble opinion. Isn't it funny, Mark, how little countries have a tendency to get big countries in trouble because they get involved in these, and I'll use the word skirmish. I mean, certainly it's much more serious than that, but they get involved in these actions, and then oftentimes the actions escalate into something far more serious.
Well, absolutely, and Iran is being very provocative at this time, and you have to wonder what their agenda is.
Yeah, I agree. How do you think this bodes for gold and silver and the price of oil? Obviously, those are the 3 commodities that I think will be affected the most.
Well, I think what we're seeing right now, Al, we're seeing gold give up its status as a safe haven investment in favor of the U.S. dollar, which is folly on the part of people who still have implicit faith in the U.S. dollar. Interestingly, the Chinese are stampeding in the gold. They no longer have any faith in the U.S. dollar.
Absolutely not.
And if there's a major military event in the Middle East, I think people are going to have to realize that in times of strife, gold always is the default currency, if you will.
You know, I find it interesting, as our listeners are aware, I'm a real gold bug and a real silver bug, and I find it really interesting that gold is perceived by some people as being a safe haven. Now, admittedly, if you're going to contrast gold, for example, to the euro or the British, pound sterling or what have you, probably the dollar is more of a safe haven. But boy, I'll tell you, the economy here is such a house of cards, Mark. I don't understand why people wouldn't realize, aside from just the folks over in China, India, and the rest of the Far East, why the folks don't realize, gold really is where we need to be with the majority of our long-term capital.
Well, I agree. I mean, gold is, the dollar has been debased over the last few years, and that's a trend that's continuing. With the advent of the quantitative easing in the United States, it's weakened the dollar even further. So I just cannot see the dollar maintaining its safe haven status or as an investment of last resort for much longer.
We talked with James Turk in another segment about the concept of quantitative easing in the United States, and he made a very, very interesting comment, and that's something that I addressed earlier in the week on BNN, and that is, his comment was, I don't see how we could have anything but additional quantitative easing, and my comment was, James, in my humble opinion, it's going on right now. Bonds are being issued, the banking community is buying the bonds, and that way the money is going out into the economy. So in effect, you've got quantitative easing happening right now.
Most certainly, and it's going to escalate in Europe at the very least.
It has to.
If money pours out of the euro, where's it going to go? It could go into the U.S. dollar. Much of it will, but some of it's going to go into gold too.
Yeah, I would agree. I would agree with that. It's interesting. You were in the news game for a long, long time. What do you think about what's going on right now compared to the events of, say, the 70s or 80s?
I think we could be in for another long, extended bout of stagflation like we saw in the 70s. I don't think we're going to see economic growth or meaningful economic growth for quite a few years. This is the 70s revisited, Al, especially if we're going to have the price of oil go to $200 a barrel or something along those lines if there's a major military conflict in the Middle East.
$200 a barrel is fairly aggressive, but in this crazy world, anything is possible. What I wonder about really is, where is it all going to end? I mean, I never ever thought I would see times like we're in right now. Trying times, no question about it. Mr. Davis, what are you doing to protect yourself and your family?
I think everybody has to realize that we cannot continue to borrow our way to financial success. People have to start to live within their means. They need to own hard physical assets that have tangible value, and people need to essentially even own farmland if that option is open to them.
It's the old story, the old story full of love and glory, so to speak, and the old story is you got to be involved in real things, you've got to get out of debt, and you got to keep your wits about you and stay informed. Marc, thank you so much.
Thank you, Al. It's a pleasure.